Perfect. So, good evening again, everyone. Where are we today? 15th of July, mid-month, Saturday, 5 p.m. as always in our masterclass weekend session. We'll take a look at the markets primarily from the point of view of the weekly charts and how we can position ourselves the next week. We're taking a look at the weekly, daily, and the 75-minute time frame. And we've got a pretty good move for 3 weeks since the market gave us this high momentum move on the upside. It's been more of a dragged extension on the upside. All-time highs, not much of slipping from its weekly highs so far. What we saw last week, the index did fairly well this week to cover that up. Yes, the underlying momentum has gone a little choppy here and there. But every time you see, or every time in the last 2 weeks, we've seen any kind of a short-term drop, the index has managed to bounce back pretty sharp. It's these kind of bounce backs which will lead to a breakout. It's these kind of breakouts which will lead to a euphoric positive sentiment from all these fears in the market. And that's exactly where the markets will try to top out. That's exactly where markets will top out. So we have to keep on keeping a very, very close eye at every time the index tries to give a breakout. Does it fail? Does it manages a shallow bounce back? And does it open up again? This is what you have to keep in mind. As of now, nothing like that. It's breaking out further. If you take a look at the daily chart from a slightly micro point of view, you will notice that Friday's move was more like yet another breakout. One can call it a consolidation in the shape of an ascending triangle. But yes, it's a breakout. So it will be interesting and important to see how the prices play out on Monday. In terms of the momentum, in terms of the trend, weekly charts are very well established. There is no particular reason, evidence, rationale from the weekly charts which can tell us, okay, I'm a little cautious, careful, scared, and I should not go long or look to go short. No. From the daily also, we don't see anything apart from the fact that we have a breakout. If the breakout fails, then something can unfold mid next week or later next week. But whatever we see, there's no particular reason to go contra. We stay cautiously bullish. The word cautiously over here is primarily because of the fact that our short-term momentum indicators are in the stretched zone. So incremental upsides may not be, a blast off. So we stay cautiously bullish, but that does not mean that if we get a good shorting opportunity, we will shy off. We essentially look for opportunities on both the sides of the market. Overall conditions fairly bullish. We do take a look at the ratio charts. Nifty with the dollar index, very strong. Nifty is outperforming the DXY very well. This is where you'll find some underperformance from Nifty. Now, this ratio is about Nifty with gold. And we've got a first cut on the downside, which means that relatively, if we consider 2 weeks time frame, we can see that Nifty's gain has been relatively lesser than that of what we have seen in gold. So apart from that, the ratio charts are fairly well poised. Broader markets are performing well. This is the CNX mid cap, pretty well established. Yes, a choppy momentum reading from the daily time frame. Yes, some kind of an ending diagonal or a wedgish kind of a behavior on the daily, but who cares as long as the trend is strong? And that's exactly the case in both the small cap as well as the mid cap. Mid cap engulfing doesn't matter. Probably it will need to weaken furthermore. Extremely stretched behavior, and it keeps on stretching itself up. That's the sign of a strong uptrend. So again, if we take a look at the broader markets, Nifty, the CNX mid cap, the CNX small cap, we are not getting any strong signs of a topping out as of now. If you take a look at the ratio chart of how the mid cap is doing vis-a-vis the CNX 500, you will see a range bound market. The mid cap per se is going up, but the mid cap per se in a ratio in relation to the overall markets have actually been kind of not exactly underperforming, but range bound. If we take a look at this CNX small cap vis-a-vis the 500, small cap seems to be doing better. So the last couple of weeks, it seems like the markets have found a better zone, a better area within the small caps rather than the mid caps. But absolute terms, both of them are doing fine. Now let's come to the second most important index, the Bank Nifty. Now what the Bank Nifty is doing, and I have no doubts about that, is essentially a throwback of this breakout. This breakout will be much more clearer on the weekly charts. It gave you a breakout 3 weeks back, and now we have a throwback. Now amidst the HDFC news event, there's a lot of movement on the upside and also in the recent past on the downside. But in terms of pure price, what we are seeing is a short-term corrective move in a well-structured uptrend. So buyers trend positive. There's no doubt about it. In fact, if you take a closer look at the weekly charts of the Bank Nifty from a perspective of Heiken Ashi and the momentum indicators that we have, for all you know, if next week Friday's high is taken out, for all you know, if last week's high is taken out, then we might find prices bouncing back further up. So weekly charts are not that strong. Weekly charts are in fact giving us some scope of strength. If it falls below Friday's low, if it falls below last week's low, then yes, there is this particular zone close to that 44, 200, 250 where it can find a bit of a support. So yes, Bank Nifty has underperformed, and this underperformance you can clearly see from the Bank Nifty vis-a-vis the CNX 500. You see, this is the ratio. See how the ratio chart looks like? The ratio chart actually looks horribly down, which means that the Bank Nifty in relation to the overall markets is still underperforming big time. What does it tell us? It's an underperforming sector, though it carries a huge weightage. So any kind of an opportunity to go short in any of the names that you get, like for example, Axis Bank has been weak for the last few days, one can look for a shorting opportunity within the banking space. Now, CNX Finance's behavior will not be distinctly different from that of Bank Nifty. We do see a breakout. This is a breakout on the weekly. We see a throwback, and this is a bounce back after the throwback. We might get some follow-through movement. Manish, you have your hands raised, but we'll get into questions, doubts little later once I've covered the views on the market. If your question is pertaining to the view of the market, we'll take it up little later. So CNX Finance and Bank Nifty, very, very similar in terms of their absolute behavior and very, very similar in terms of their relative behavior with CNX 500. Let's come to auto. Now, if you remember, auto, FMCG, exceptionally strong uptrend, extremely stretched on the weekly charts, just not willing to come down. So what do we have in the CNX auto? Yet another positive week, flattish, a classic doji on the Japanese candlestick charts. Not much of a problem on the daily charts either. Some kind of an engulfing. We'll see maybe Tata Motors, Maruti, M&M. These are the three stocks which enjoys the maximum weightage. Is there any sign of weakness in them or not? Well, I personally feel that Tata Motors, there is a chance of a short-term drop in the next few days. There's a possible short-term. But what can we say? In terms of trend, well established. In terms of the momentum, M1, M2, very well established. Yes, stretched. Yes, some kind of an oscillator divergence. It's very obvious to see these kind of oscillator divergences. See, oscillator are banded indicators. They are not open-ended indicators like an MACD or an ROC. So, यहाँ पे divergence बनना बहुत obvious है. All the divergences should not be considered as if they are going to reverse the trend. So, what do? Until and unless we get some authentic, reliable, rational on our charts that yes, CNX Auto has slipped and is about to slip some more, we do not create any contra view. We're not willing to go for any contra trade. But yes, within the pack, if we find any kind of relative underperformer, if you remember a couple of weeks back, we had gone short on Asher Motors and it was a successful trade. So if we get an opportunity, we will not shy away from that. But again, CNX Auto, in terms of its ratio, also doing pretty well. Now, in terms of the ratio of CNX Auto with the 500, you might clearly see some divergences here. Very distinctly clear divergence in the ratio chart, which is not there in the CNX Auto chart. The ratio will also give you some signs of strength. That was the breakout and now it's throwing back. So the ratio is weakening a bit more than the absolute CNX auto index chart, which is always the case. If you notice carefully, closely, you'll see that any sector or any stock vis-a-vis any index or benchmark will tend to show you weakness before the absolute weakness comes. So we have to keep a close watch at this particular ratio. Come to consumer durables. Now we have a momentum shift here. All throughout last week in our prep sheets, I was writing it out that consumer durables, the M1, M2 is weakening, trend is not reflecting it. We've got some good looking divergences on the weekly. We've got some good looking M1 divergences and M2 divergences on the daily. Yes, the trend has now started to kind of slip. The Heiken-Ashi candles finally has started to give us some red hot candles after a long time. In this entire rally, the moment it gave us a red hot candle, it bounced back, and this is the fourth time that it's giving it. Do we have a fall? Do we have some kind of a corrective move towards these lows? Let's see. If it comes, we're going to definitely make use of it. So consumer durables, we can look from the point of view of weakness. Now take a look at this chart. This is consumer durables with 500. What does this tell you? It's weak. So consumer durables absolute was completely range bound. And this is the region, this is the zone, this is the days, this is the phase of the market where the consumer durables in its absolute terms has gone kind of range bound, but in relative terms it is weakening, which adds more support to our evidence based shorting opportunity, that if we get some kind of an opportunity to go short in any of the large caps within this pack next week, we're going to go for it. Energy, great move recently. Reliance played a very good part over the last couple of weeks. Now in this case, momentum has just started to slip. Short-term trend has just started to slip, very early to confirm this. Weekly charts very well established. So there is no particular reason to be very bearish on the CNX energy based on this. Doesn't, because the weekly charts are strong. Consumer durables, definitely across daily and weekly, are showing signs of a topping out. The CNX energy ratio chart is not that great. It's not that great at all. So we can expect some kind of a cautiously bullish range bound activity. It may stay volatile. So we'll keep it in our watch list. We'll monitor it closely. But we do not have a concrete plan of action with the CNX energy space and its respective stocks. FMCG. What can we say? Very, very similar to what we can conclude what we did with CNX Auto. Very strong weekly charts. Oscillators will 100% give you negative divergences like that. They don't work because the trend is so strong. We need a proper trend reversal from the daily. Bare minimum what we need is that. And it's not there. Momentum has been choppy. M2 divergence is all over the place. The damn thing doesn't come down. Either ITC picks up, Hindustan Unilever gives a breakout, the breakout fails. Something is happening from someone within the pack, especially ITC. So it's better not to be too brave and go and look for a short from this counter or this space. We'll see if the momentum continues to stay down, if the trend really slips and it looks really good, we may. The CNX FMCG with the overall markets, if you take a look at this, is not good, which means that it's underperforming just like the way we saw in CNX consumer durables. इसका मतलब ये कि if the CNX FMCG, yes, actually gives us signs that the trend has reversed, and if we get a good shorting opportunity in any of the, let's say the top 5-6 names, stocks, then we can go with it. IT, Savior, big, huge move coming in last week. And thanks to this move, which is almost 4.7%, we are back to these kind of highs from where it has kind of corrected a couple of times in the past. Infosys, if you remember, we went long on Infosys on Thursday and that trade is playing out. If you remember, we've gone a weekly breakout trade in Tech Mahindra. We will take a look at our weekly portfolio sometime later today. So both our IT picks are doing good. CNX IT has picked up really well. And this is exactly the discussion I think we were having some time back. That as forget the some time back, what do we see right now? We see that we see that FMCG, consumer durables, have definitely slowed down and are underperforming the CNX 500 over the last 2 to 3 weeks. This slowdown, if it continues, if it leads to a shift in the trend, and if these stocks starts to fall, then we need to support the index, we need someone else to pick up. So who better than the IT? And that's exactly how it is playing out. Bullish, we have a breakout. The ratio is picking up. Of course, it will pick up like this. So we maintain a definite bullish view on the CNX IT and the stocks. We have a long position in Tech Mahindra and Infosys. We maintain a hold. Metal, choppy, bullish. At times, the upside breakouts which we saw in SAIL, Hindalco, didn't hold much, then later again picked up. So metals, it's not a clean move, but it's a clean trend momentum on the daily, clean trend momentum on the weekly. So there is no particular reason to call for any kind of a top out or bearishness. Bullish view. We also have a couple of stocks in this from this pack. We have SAIL and we have Hindalco as well. So we maintain a hold. I think these 4 stocks will be the biggest gainers, 2 from IT and 2 from metals. It's good that when these sectors picked up, we already had identified a couple of opportunities and we have gone on board. Media is something that I do not track that closely, but yes, the sector is giving us a breakout. You remember this falling wedge, breakout, throwback, continuation. So it all looks bullish for the media. Pharma can be an interesting one. First, let's take a look at the CNX Pharma Absolute, and I see a beautiful looking rising wedge. I always get a little interested when I find this kind of a pattern. It gives me memories of the top of 2007, wherein this kind of an ending diagonal was there. Momentum is also slipping in the daily time frame, which supports this kind of a pattern. Extremely stretched behavior on the weekly. This does not necessarily mean it has to fall. What it tells me is there can be an opportunity, a contra opportunity on the downside. So you need to keep a close look at stocks like Dr. Reddy, Cipla, DVs and Lupin, right? But don't expect if the fall comes, don't expect it to be a huge fall. It's just going to be a healthy, short-term, technical, corrective move. If you take a look at the CNX Pharma with the 500, nothing great. It's kind of range bound. It needs this breakout. If we get any kind of a big move from a Dr. Reddy or a DVs or something, we can get a breakout. So we need to be careful. What I'm expecting is a 2 to 3 day kind of a short-term corrective move. Nothing more than that. Realty, again, just like auto, just like FMCG, no dearth of resilience. Look at the way the Heiken-Ashi has kind of extended themselves. I don't think so that real estate has ever given this kind of a multi-week kind of a move ever, the way we see it now. M2 divergences is very, very obvious on our charts. So what we can think is, ab niche aayega, now it's going to weaken, and it doesn't weaken. But you know what, it will weaken someday. So I won't suggest you to go long at these kind of extended levels, but wait for some opportunity on the downside. And finally, if we take a look at the CNX Realty with the 500, what do we see? We see that it's not broken below its highs. It stayed range bound, where the CNX Realty has broken above its previous highs. See where the Realty is? So this breakout that we are noticing on Realty is kind of not corroborating with the overall strength that Realty comes vis-a-vis 500. Bottom line, it's underperforming a little bit. So any kind of a sign of a weakness or a top out, we'll be, very quick. We should be very quick to catch on to that. So keep an eye on DLF, right? So before I go to our Excel sheet, update our trades and trail our stop losses, etc., the view is cautiously bullish. Bank Nifty Finance can be interesting. They can drop down a little bit and test their breakout levels, but they have potential to bounce back and support the market. IT had a great breakout. Metals are also supportive, bullish on both of them. It's the consumer durables, it's the FMCG, which are definitely slowing down and can give us an opportunity on the downside. And we can add a bit of pharma from a contra point of view, and maybe real estate, but later. We don't have much of a... So all this boils down to the fact that we will trade exactly the way we are trading this month. This month so far has been really good, except one wrong trade. I think most of our trades have gone right. We maintain the same view. If we find good long trades, we'll go for it. If we find good short trades, we'll go for it. And wait for a sectoral rotation to happen. It's ripe that a sectoral shift rotation should ideally happen in the market sometime soon. Right? So that's my take on the markets. Now let's go to our sheet and let's update our stop losses and take a call on which are the stocks or positions that we would like to exit on Monday.